Alright guys, XRP is heading into a real make or break moment. The SEC has literally just 3 days left to make a decision that could reshape the whole narrative around this asset. The deadline is February 26th, and this is not just a random date on the calendar, it is the officially designated final day for the regulator to decide on the T. Rowe Price Active Crypto ETF, a fund that includes XRP as one of its core holdings. And here is the paradox. The fundamental catalyst is only now approaching its climax, while the market already looks like it has gone through a serious shakeout. As of today, XRP is trading around $1.39 per coin, which is lower than yesterday's close and roughly 46% below where it was a year ago. Over the past week, it has dropped about 6%. And all of this is happening right as the market is bracing for the SEC's ETF decision. So let's break this down calmly. What exactly is going on? Why February 26th is such a critical day? What this ETF really is? What the charts and on-chain data are telling us? And which scenarios I see playing out from here? The main character of this story is the T. Rowe Price Active Crypto ETF. It is not a pure single-asset XRP ETF, but an actively managed crypto fund that gives exposure to several digital assets, including XRP. Structurally, it falls under the category of commodity-based trust shares, rather than a standard equity ETF. But for us, the key point is different. Through this vehicle, traditional capital gets regulated access to XRP via the NYSE Arca platform. In its notice, the SEC clearly stated that February 26, 2026 is the final date by which it has to either approve, disapprove, or institute further proceedings on NYSE Arca's proposal to list this fund. In other words, there is not much room left to kick the can down the road. Formally, the regulator has 3 buttons to push. But in any case, the market is going to get a strong signal on whether the SEC is ready to let XRP into the institutional arena through ETF-style products. And remember, all of this is unfolding after the August 2025 legal victory that effectively confirmed XRP's non-security status for secondary market trading. So the legal groundwork is much cleaner than it used to be. And the open question now is, will the regulator go all the way and accept XRP's place inside a major traditional asset manager's crypto vehicle? Where the XRP market stands now, price and technicals. Now, let's look at the market itself. At the time of recording, XRP is trading around $1.39 per coin. Over the last 24 hours, it is down roughly 2-3% versus yesterday's close. Over the past week, it is down about 6%. Year over year, it has dropped around 46%, from about $2.57 to current levels. If you zoom out, you can see that in January 2026 XRP was trading in the $2.3 range before it started to roll over, making lower highs, and eventually sliding into the 1.3, 1.4 area where we are now. In other words, we are already deep into a sizable correction from the recent highs, and the market has entered a phase where any major news from the SEC can serve as a trigger either for a strong relief rally or for a final wave of capitulation. From a technical standpoint, 3 zones stand out. First, the support area around 1.3, 1.33, where buyers have been stepping in recently. Losing this zone would be a serious problem for the bulls. Second, local resistance in the 1.4, 1.5 region, which is where sellers have repeatedly taken control in the past few swings. Third, a more distant zone around 1.82, which could come back into play on a strong bullish catalyst and renewed institutional inflows. Right now, the broader trend still leans bearish. This correction has been going on for weeks, and without an external catalyst, the market would likely keep grinding lower or chopping sideways. The SEC decision is exactly the kind of catalyst that can break this pattern. Now to on-chain data, this is where it gets interesting. Over the past week, XRP has seen one of its largest spikes in realized losses in recent years, with roughly $900 million in weekly losses locked in by market participants. That is what happens when a huge number of traders sell below their cost basis, effectively capitulating and exiting at a loss. There is also historical context. Previous extreme spikes in weekly realized losses on XRP have often been followed by substantial rebounds over the following months, with gains that in some cases exceeded 100% from the local bottom. Of course, past performance is not a guarantee of future results, but the pattern suggests we are in a zone where weak hands are capitulating and stronger players may be quietly absorbing supply. In essence, the on-chain picture lines up with what we see on the chart. A steep correction, plenty of fear and exhaustion, and at the same time, a major fundamental decision just a few days away. If you look at how the crypto community is reacting on platforms like X, Twitter, you can clearly see two opposing narratives. One camp is leaning hard into pessimism, talking about liquidations, weak demand, possible moves down to 1.2 or lower, and the idea that the SEC will always find a reason not to approve. The other camp is building its thesis around the combination of the 2025 legal win, XRP's inclusion in Rowe Price's crypto ETF, and the rare on-chain capitulation signal, and is positioning for a strong medium-term bounce. A key detail here is that Rowe Price is a major traditional asset manager, not a small crypto-only shop. The fact that XRP is included in their active crypto ETF proposal is already a signal in itself. Large institutional players see a reason to hold XRP in a diversified basket, despite the SEC's historical resistance. 3 scenarios for February 26. Now, the big question. What can actually happen on February 26th? Scenario 1. ETF approval. The SEC gives the green light for Rowe Price's active crypto ETF to list on NYSE Arca, including XRP exposure. In that case, the market will read it as a strong institutional stamp of approval. The legal clouds have partly cleared, the regulator is not blocking access via a regulated fund wrapper, and many players will treat this as a signal that XRP is safe enough to hold in traditional portfolios. On the chart, this scenario could trigger a sharp move. First, a battle around the 1.45-1.5 resistance zone. Then, if volume comes in, a push toward 1.6, and later, potentially a move into the 1.82 region over a medium-term horizon. How far it can run will depend heavily on the strength and persistence of new inflows and how quickly short-term speculators start taking profit. Scenario 2, a clear rejection. The SEC outright rejects the proposal, citing volatility, market risks, or investor protection concerns. In the short term, this would almost certainly be negative. Expectations get crushed. The rumor traders exit their positions, and we could easily see a test and possible break of the 1.3 support with stop-loss cascades below. However, even in that case, the core facts remain. XRP still has its non-security status for secondary trading. The ecosystem continues to evolve, and long-term institutional interest does not magically disappear overnight. So while this scenario would be painful in the moment, for patient investors it could eventually create some of the most attractive entry points once the dust settles. Scenario 3. Further proceedings. The technical middle ground, where the SEC neither fully approves nor outright rejects, but instead initiates further proceedings and essentially keeps the door half open. The market usually reads this as more uncertainty. The asset remains in limbo, some traders lose patience and exit, while others decide to sit tight and wait for a later resolution. Price-wise, that kind of outcome often translates into choppy sideways action for XRP. That could mean extended range-bound trading somewhere between 1.3 and 1.5 until the next big catalyst shows up. My take and what traders should watch. Putting it all together, here's where we stand right now. The price has already corrected significantly, roughly 46% lower than a year ago, and well off the January highs. On-chain data shows a major capitulation event with extreme realized losses, which historically often lined up with forming strong local or even structural bottoms. A key fundamental catalyst in the form of the SEC's ETF decision is just days away and is directly tied to institutional access to XRP. If you are trading or investing in XRP, here are the levels and signals I would keep an eye on. The 1.3 support zone. Losing it would strengthen the bearish case and could trigger another wave of fear. The 1.5 resistance area, a decisive breakout on the back of the SEC decision, would signal that the market is pricing in a bullish outcome. If the ETF is approved, higher medium-term targets in the 1.6 and 1.82 regions are realistic areas to think about scaling out, or at least tightening risk, rather than just blindly chanting to the moon. And above everything else, remember, no SEC decision replaces proper risk management. The XRP market has already lived through lawsuits, delistings, and periods when people wrote it off as a dead asset, and yet every major wave of fear has eventually been followed by new phases of growth. The ones who survived those phases were not the loudest voices on social media, but the traders and investors who sized their positions wisely and never turned their portfolio into a casino ticket.